right, good day, everybody. We have a fun and exciting webinar, a lot of content to deliver today with a super great guest. So throughout today's webinar, all this content and everything we talk about is for you, just to provide as much value and insights to a number of areas where our very special guest, Ketan Patel, is an expert in. The agenda today is diving deep into a really exciting story from Ketan. So excited for you to share that. We'll then talk a lot about capital raise. As we know, investors, there's no perfect mix of debt and equity or even all equity, no matter what class you're investing in. So we'll be going deep and focusing majority of our time on that topic. So my friend KP, we are extremely excited to have you here. Not only are you an awesome guy, but super knowledgeable and experienced. And then the other thing I just love, it's always exuding from you that I see is your passion towards helping people and in real estate investing. For those in the audience, Ketan has a great diverse background in all things real estate, single family side, multifamily side, both active, passive, teacher, trainer. Again, you name it, we got it all here. So again, officially, welcome aboard. And how are you doing today, Ketan?
I'm doing great. Thank you so much, Nate, to give me in this opportunity. I'm very excited to share the message, have a great conversation about capital raising and mindset and scaling your business and everything.
Awesome. And again, as you guys can hear, the passion is there. And I know you have such a giving heart. And I know that's what everybody's going to hear today. But let's start with yourself, man. Give us background on what do you do?
Yeah, so right now I do high performance real estate coaching. So I help real estate entrepreneurs go to the next level by shifting their mindset, having the right strategy, and also help them with raising capital. And I also have a multifamily investment firm where investors invest passively with me into bigger apartment complexes.
Awesome, man. And as I said in the intro, it covers a lot of bases. One thing that was just, stood out to me is sort of your story. Can you walk us through as much detail and as far back as you may want to go in it? But I really think that a lot of people will be able to resonate hearing, where you've come from, where you've gone, and what got you to where you're at now.
Absolutely. So originally, I'm an immigrant from India. I came here, I wasn't even speaking English, and I got my Doctor of Pharmacy degree at an accelerated pace. And at that time, no experience in the world of real estate, and I'm practicing pharmacy. And I started realizing that just this W-2 job is not going to be enough for me. I need to do something. I need to create a passive stream of income. So I started buying single family, and then I realized that, single family, you could only scale to a certain point, right? And my goals are bigger. So I started going into multifamily, buying 3-unit, 5-unit. And then I realized two very important things. One is, if I want to stay in the world of real estate, it doesn't matter what I buy, where I buy, and what I do with it, I would always need capital. So I decided to master that area. I raised over $10 million in equity for the real estate syndications. And then I also realized the other piece is, what separates people who get to their goals in real estate versus people who are not able to reach. And there are three important things. It's the mindset, strategy that is very unique to you, and execution. So I studied that from Tony Robbins to Dr. Joe Dispenza, Wim Hof, traveling around the world, all kinds of seminars and trainings and coaching and everything. It initially was to get better at my business, but then I started realizing that I'm having too much fun at this.
That's awesome. And again, as you can hear, especially audience, if I'm sure it resonates, is it's something that's always really cool with real estate investors in all asset classes. Many of them are sort of brought up by their own bootstraps, if you will. So to say, coming to the US, speaking no English, getting a PhD and having no experience in real estate, to now fast forward to where you are with some pretty impressive metrics you threw out there. Needless to say, you probably have the mindset, strategy, and execution down. And that's just awesome to hear. I'd love to go back to the beginning of your journey in the single family and even into like multi-unit, multifamily. And talk a little bit more detail about how and exactly your mindset and thought process in looking to scale from one to the next.
Yeah, so the very, very first deal, right? I want to talk about that because a lot of times when people are looking to scale or buy their first property or fifth property, the challenge is always the same. I don't have the money. Maybe I don't have the time. I don't have the network. I can't find the deal, or I don't have the skill set. Something along to those lines, right? So the very first deal was a very small deal. I only needed $25,000, which wasn't a big amount, but unfortunately I had no savings, right? So I got two pharmacist friends to give me $8,000 each, and my problem went from 25,000 to 8,000. And I realized that it's either I believe in that limitation, I don't have the money and I wait, or I have to be resourceful and think in terms of possibility and what I could do. So then I came up with the idea of putting everything I have, working overtime into a 401k with my employer, and they were matching it. And I took all that money out, that $8,000 out, and that started the investing journey. And it taught me that lesson that no matter where we are in our investing career, we'll always have two roads, the road of limitation and the road of possibility. And then from that, the next deal, and sure, the challenges come in the world, that's normal. But then when you're thinking for possibilities, you also get ideas to implement and stuff.
Awesome, man. And you set me up. I have to throw this sort of joke out there because everyone remembers their first. So it's very funny that you bring up the first deal, and then everybody else can hear you really referenced the three-legged stool that you preach a lot about of mindset, strategy, and execution. You had to bring all that together, just even on deal numero uno, not to mention the many thereafter. An interesting topic you talk about there. Stepping over the ledge in that perceived ledge of risk, taking the next step and taking the action. And, at some point in time, whether somebody is listening in that's done 100 plus deals or starting to do their first, you always had to get the impetus and take that action and risk. What kind of feedback might you have to people that are in that, whether it's take the risk in their first deal or take the risk to really double down their business and go from 10 to 20, or even single family to multifamily? What do you got for us there?
Yeah, and that's a great question, right? At the end of the day, what I've realized is without the risk, there is no growth. And without the growth, there is no happiness and fulfillment. And if that's the case, what are we risking anyways, right? There's not much to risk. And to give you an example, when I was a pharmacist, so I started into real estate, I bought these two, three properties, but the cash flow wasn't enough to that point. It was building up. But I did the numbers and I'm like, I need to wait 3-5 years to fully live on passive income, and which I'm able to do right now. But at that time, I realized I need to change the strategy. So what I did is I left the job. I bought a senior care business that I knew nothing about, and I had no money to buy that business. And all of the clients in that business that's a senior care business. So it's all highly risky to begin with. And before all this happened, I had already lost a lot of my savings in another business venture. But I realized, what are we really risking? It's just a mental game. At the end of the day, any action you take, you always get some kind of feedback. And that kind of helps you to go again at the next venture, or reframe it or something. But if we don't do that, then we get into that stagnation mode where the income is good, or the business is going well, but we don't feel that juice. We don't feel that excitement of maybe hiring employees or raising capital or chasing bigger deals or looking into a different arena and so forth.
Awesome. And it all goes back to the crazy stuff that goes up here, that goes on up here. And once we know how to, whether condition ourselves or reframe the mindset, and then put it into that perspective that I love how you describe that, then anything's possible. And, look, that sounds really cliche to a lot of people, but these traits that you talk about, whether it's real estate investing or anything else, are synonymous with some of the most, the richest or most successful people in the world. And money doesn't make the world go round. We'll certainly talk a lot about money and capital raising, but these types of things and traits are definitely what you end up seeing when you rub elbows with sort of the so-called upper echelon, and no matter what people are doing there. So I love that, man. And hopefully that can resonate with a lot of the audience here. You can do whatever you put your mind to. It's just about how you think about it and then taking the right action. So awesome. So again, some of the big perceived risk is single family to multifamily. When do people transition? And the real question I want to sort of get into here is, we'll focus on one half of the question actually. What are some of the main differences that you see in single family investing versus getting into multifamily? And then we'll talk about the contrary as well.
Okay, so the main difference is the number one is the transaction cost, right? So the time and the energy that it goes to hunting number of single family deals and doing the numbers and finding the deal that works, getting the financing, closing. There's so much time, energy, and money that goes in there. And you have to keep repeating that, right? So I have three single family. I need to repeat that cycle to get to fourth, fifth, sixth. Versus multifamily, if I'm buying a 5 unit building, it's just one transaction. I only need to find the lender one time. I only need to do the analysis one time. So first is scaling is a little easier. And in terms of, a 5 unit or a 10 unit building, it has one roof, right? Versus having 10 different roofs. So management becomes much easier. Even if you have management company or don't, you could go to the property and just kind of address everything you need to address instead of driving to 5 or 10 different properties, right? In terms of refinancing, capturing value, things are much easier to renovate those 5 or 10 units and bump up the rent. Maybe do something to get additional rent, some kind of amenity at the property. Absolutely, you could do some of those concepts at single family, but it would be difficult because you'll have to spend more time and energy, and then the return on investment will start to decrease. So those are some major benefits of kind of going to multifamily versus single family.
Awesome. And would you say that, at the end of the day, getting into and investing, acquiring, repositioning, and just holding and managing single family and multifamily in your world, if you had to pick one of these answers, is it similar or is it very different? How would you sort of answer that?
Single versus multifamily?
Yeah.
Yeah, so absolutely, depending on the area and if the area is distressed and what kind of tenants and clients are like, so there are some variations, but one benefit sometimes for single family is the renter on an average will stay longer, right? Versus a multi-unit building. So in that sense, the single family is a little better to manage. But in terms of repairs, renovations, and rent collection, and the other side, the financials and things like that, the multifamily, it's slightly easier to manage, all being multiple units under one roof.
Awesome. I love it and definitely resonate and agree with that. I also will say, the one thing with multifamily is that as much as your good decisions can be amplified, right, by X number of units that are in a given complex or asset or property, the same thing goes with the mistakes. So you certainly need to be diligent, but that goes for both sides, single family and multifamily. You can't do anything of real estate investing blindly. You might be able to look back the last 5 years and see a lot of the momentum and the price appreciations that have saved a lot of real estate investors from having to be as diligent. But I think in the landscape we do looking forward, as long as you're diligent, they can be very similar in style, but also easier and more impactful in the multifamily side, just by the economies of scale type of topic. And so with that being said, economies of scale, at some point you transition from smaller multi-unit, multifamily properties to larger complexes. So how did that happen? And again, like what was the big jump that you had to make, mindset or physical, in order to make the bigger jump from, a couple unit property to, I see you doing a couple 100 unit properties nowadays as far as what you're involved with.
Yeah, so then from single family, I got into 3 unit, 5 unit deals, and sometimes pieces of land that I could subdivide and sell and those kind of things. But then and now I have a lot of people reaching out to me. They want to invest their money with me, right? So before, if I'm doing a deal or two, maybe you could get a couple investors in. But now when there's more investors, this model wasn't sustainable. And the same scalability question came again. I'm finding very, very good profitable deals that are 3 unit, 5 unit that I could make killing on cash flow and appreciation. But again, I'm asking myself the same question. Doing 2 or 3 or 5 profitable deals what does that mean to me versus the scalability? So naturally, I had to jump onto the syndication side. So the question I had to answer was, the first question was, what is my strategy? Because without the strategy, it's difficult to take action, right? You don't really have a plan. You're not sure where you're going. You don't have the clarity. And without all that, a lot of effort just gets wasted. And of course, you don't need the perfect strategy and you don't need to be clear on everything, but you need to have a working strategy, so to speak. So that was my first question I had to answer for the transition.
Awesome. I love it because again, like, how do you know where you're going to end up if you don't know where you're trying to go? And very, very, very great points. And then I think a touchy subject is, a lot of investors we see will have paralysis by analysis too, and I think that's a great point that you talk about there. Of like, you certainly want to be very diligent, but there probably is a point to where, especially in today's market, with how quickly you have to move on good opportunities that might be at hand or that you see, especially if it's anything on market. There is a point to where it may be a little too much and will prevent you from transacting or scaling and continuing to get to where you want to go. Anything feedback related to that?
Yeah, and I understand that firsthand. Putting all of these offers and going that, you always feel that, and there's never a moment where you're like, I'm comfortable, I know everything, and it's good. There's always going to be that little bit of uncertainty factor. So my motto is, spend all the time and energy and learn as much as you can about the market, about the deal, about the strategy you're doing, numbers, and do the research and do everything you can. But then there's a point that comes where you have to be ready that now I'm ready to pull the trigger. Because otherwise there is no perfect day where you reach that completion, because you'll always keep learning. Even after raising over 10 million in capital, I'm still learning new and new things. It just never ends. So as long as it's, good enough for you're like, okay, I know what I'm doing, where I know this is not going to be a catastrophic mistake, we kind of have to pull, because that's when we go into that transaction, we learn more things that just kind of evolves our model of how numbers should look and how deals should be managed, and then we could do it better the next time and the next time.
Awesome. And the only thing I'll add on top of that too is, I think it helps you when you look at things from a diligence or due diligence standpoint, from a conservative mindset, because if you're looking at things conservatively, inevitably you should hopefully be creating a little bit of buffer room, and maybe that gives you that extra push. But I know we'll talk even more on mindset, and you hit on this earlier, but I think it's just so important to talk back to, like, okay, do I make a decision? Do I put a bid in? Do I issue, do I put in an LOI? What walk me through that mindset coaching one more time on, do it or not, or I think I should do it, go take that step.
Yeah, so everybody's different, right? So for you, the first step to realize for a potential real estate investor is like, okay, where is my mind at? I've reviewed 30 deals in the last 2 months and I have put zero offers. Like, what's going on here? Something needs to be explored. What am I really afraid of? Am I afraid of losing the money? Am I afraid of, I'm not sure how this is going to go? And it could be different for everybody. For somebody else, they are not afraid of losing money. They just feel that these numbers don't make sense. There needs to be something else. But again, if you have reviewed 50, 60 deals, and if you haven't found one deal, then maybe something needs to be changed with your approach, right? So looking back, and that's why it helps to have some kind of tracking sheet or something like that, where you could be like, I toured, and that's what happened to me. Way back before I bought my first deal is, I toured 15 deals, the numbers made sense. And I'm like, why am I not putting the offer? The numbers made sense. I know the market. I went to pharmacy school there. What's going on here? And then, once we know what the challenge is, then we could have a solution to it and be like, oh, okay, I'm just afraid and I'm afraid of this thing. This is the plan to solve it or whatnot. So.
Man, I love it. And it really, forces you to have to take a step back and do some self-analysis, looking at, if you're more analytically minded, look at specific historical data on yourself. And then otherwise, I love that question of what's holding me back. And so I think some very, very valuable insights, because again, I think the biggest prohibitor of people to grow and scale is just taking that action. And so that mindset that you just talked about there is so important in order to continue to get to where you want to be. Again, while using diligence, but a lot of times we are our own biggest enemy in regards to where we want to go.
Yes, and something to add to that is I want people to think it's never about that first or second deal. It's never about that money necessarily. Nothing wrong with making money on the transaction, but if you really think doing that one or two deal will give you a reference experience. And that would enable you to be like, oh, maybe I want to syndicate, maybe I want to do hotels. Who knows? If I hadn't bought that first single family, I wouldn't have been here today. And there's so many possibilities, so much excitement, and so much abundance waiting for you. So you have to look at it from that angle. It's not about this two deal and making 8% or 15% return. It's a big, big playing field waiting out for you if you could get over this step. And then you could see that, okay, there's so much more waiting out there. I should take this action. But if you only look at from the deal level, then it doesn't seem that exciting. It feels like, yeah, I don't know if I should move forward with this or not. But if you see that it's going to give you experience, it's going to give you contacts, all of these things, right? So I would like to add that point too.
Man, you hit home with me, my friend, on that one, because I do a little bit of dabbling in single family on the side, and I came to some realizations recently, really by just a similar mindset, man, of what is the best use of my time, what do I get the most fulfillment in, what am I best at, and I'm here in the lending money seat. That's what I've come to the realization of, and I'm good and happy with that. So with that said, let's definitely start talking money. So let's walk through sort of anybody that might be in the more beginning phases of thinking about capital type raising. So, try and answer some of the broad of the who, the why, the when, the how type of questions when it comes to, like, let's start somebody thinking about starting to raise capital.
Yeah, so on a broad level, if you are somebody that's, flipping houses or buying some house, single family for your portfolio or whatnot, a point's gonna come where you're going to realize that you could only invest so much of your own money, right? You have to have a system to get capital. So easy thing is the inner circle. Doesn't necessarily mean friends or family. It could be anybody that you worked with, that's in your current profession, somebody from school that in your community, that inner circle. Because the number two things that people look for when they invest money with you is trust and expertise. So they want to trust you as a person first. So if somebody's in your inner circle, that's already taken care of. Now it's the expertise. Now they want to know that you know what you're doing with real estate, right? That you have a plan, you have a little bit of experience, and you'll be very careful with their money. So once you start showing that to them, it would help. And a common block that I see from a lot of the clients that I coach, a lot of the strategy calls I've done, is the limiting belief around, hey, I don't want to talk to a friend, or I don't want to talk to a coworker. It's going to seem salesy. I don't want to come off as salesy. I just don't want to, it's a big thing basically.
And what's your advice mentally, mindset wise? Because I couldn't agree with you more. I wish I was smart enough to say I was going to ask you that question, but since you brought it up and brought it to mind, please help give some clarity in talking through that mindset.
Yeah, so and that's something I want audience to know that was very challenging for me too, and especially being a pharmacist and starting this as even more, being a healthcare professional, and now I'm asking for money and that stuff. So the biggest mindset shift is you have to think of service, not sales. So think of this as providing opportunity to that particular person, right? You are not, first of all, forget your attachment to the outcome. I don't care if the person's investing with me or not. My goal is to educate them about my brand and the opportunity I have, the market, the details, the strategy, whatever it is for you, and give them the rewards, but also show them the risk, right? Be very open. I don't have anything to hide. Talk about in this kind of investment, these things could go wrong. and then give them that. And now it's their job to decide if it's good for them or not. When you look at it from that angle, the whole game changes versus I need to get money, I need to get investment. No, we need to give them the opportunity. We are giving, we are not taking. And then they will decide. Certain folks will connect with you. They might like the idea. They might learn more and invest with you. Certain folks, they might not like it. But think about it. Would you have one of your friends or family or somebody in inner circle do business with you where you could be genuine and talk about the risk and be a good steward of their money, or that money go to somebody else at the end of the day?
That's awesome. And what's great is that, what you just said relates very much to the two pillars that you said is, imperative for capital raise of trust and expertise, right? So when you take that approach, you're naturally going to be displaying, trust because you're being very open and you're showing not only the pros, but the cons of the potential risks. And then you're also showing your expertise in order to then get them to a situation to where they see that this is an opportunity. And like you said, not a sort of sleazy desperation for I need money to do more deals. And so I love how you tie all that together. So there's one other problem, at least in my mind, when it comes to capital raising, sort of the question that always is outside of how do I approach this without coming off in that manner or too salesy, but then any feedback related to the big sort of topic. And I know there's a lot of variables and different situational experiences to asking for the money. And can you talk a little bit about just broad strokes around that?
Oh, like getting the commitment.
Exactly.
Okay, yeah, so and you're correct, there's many nuances to this thing, but on a global level, what happens is you connect with somebody, you are trying to gauge, your objective is to see if they're interested in real estate investment or not, right? And let's just say if they are, then maybe you have a follow-up call, you're presenting the opportunity, and then in the end, you could just say something like, hey, if you have a current opportunity, you could be like, I'm looking for some investment partners for this deal. You could always say, do you know anybody that might be interested? Or you could be like, just wanted to check in with you to see if this would help you with your objectives, something like that. And then they could let you know as to like, no, I'm thinking I need to buy a house. Maybe it's not the right time. Or I like this opportunity, but I have a question on this or something like that. So there are many approaches, but the goal is before you jump into the deal, build the trust in relationship, get to know them as the person first. And that doesn't have to take hours and hours. Genuinely listening for 10 minutes as to, what's been going on in your life, what's going and asking them, what is your goal? Are you trying to earn some income on the side, or you're looking for long-term appreciation, things like that. And then you learn, oh, okay, they have a busy schedule and their goal is to cut some hours back, and even a little bit of passive income would go far. So then you could talk about, oh, okay, I have this sink into your opportunity piece. Oh, actually, I am working on an opportunity that you might be interested in, or you could reach out and then talk about it and slowly get to the commitment phase.
Awesome. And, sort of as you said, as we talked about earlier on here, is at some point you just sort of have to take the action and ask, but certainly do it in the right manner and way and based upon how you build trust and understand the goals, the needs, the wants of who the potential investor is. And after you've shown your expertise, but at some point, you do have to ask. Most of the time, if it was as easy as not asking, then there'd be a lot harder to transact in real estate because money would be thrown at everybody, and that's certainly not the case. So I love what you teach there. And along the lines of teaching, any other just like topics that come to mind that are sort of consistencies and things that you talk about and teach and train others in as they're continuing to work in capital raise?
Yeah, when it comes to capital raising, I'm a huge proponent of building a strategy that works for you. So again, I don't know, where the audience members are in terms of their growth stage, but if you are somebody that's good at finding deals, that's good at analyzing deals, you already know what market and if your only bottleneck is capital raising, then I would highly encourage for you to have a strategy, build a thought leadership platform. So either a meetup, hosting your podcast show, maybe connecting with people on LinkedIn. There's 100 strategies out there. Picking a strategy at the end of the day, what we are trying to do is deliver value to more people in a systemized way. That's what it's all about. So the word thought leadership or marketing could be scary sometimes or be turning off, but I like to boil it down into let's figure out a way to get your message to more people. That's fun for you, something that you enjoy. And then when you put that into place, what's going to happen is now people would start to know more and more about you, and with less effort, more people would invest with you, which means you could buy bigger deals, you could just buy more deals, and you could start scaling your business.
That's great. And, again, sort of back to everybody remembers their first, but the first deals are always the hardest, right? And so as you pick up steam and momentum and show proof of execution, things do get easier. One, because you're just gaining more confidence and you have a better knack and ability to just go out and get whatever it is, whether it's into investing or into raising capital, but go out there and get it. Allow yourself to gain momentum, and that will certainly go a long way. I think it can be a touchy subject at times, raising capital. And one reason is because I think there's just a number of myths out there about that. So talk to me about that. Any myths about raising capital that you'd like to address and sort of throw out on the table here?
Yeah, absolutely. I'm glad you brought it up. So, the myth number one out there is find the deal, find a great deal, and the money would follow. That's just not the complete myth, basically. It's not the complete truth. What happens is, where is that money going to come from? It's going to come from investors. If somebody reaches out to you randomly out of nowhere with a deal, how likely are you going to invest in their deal? Probably not, without knowing them as a person and what their company does. So I've talked to too many investors that have a great apartment complex under contract or a great deal. And now you know what happens. The clock ticks. You got the 30 days or 45 days. And sometimes, yes, the money could follow. But a better stress-free alternative is to create a pool of investors that you have built some relationship with. And that takes a little more time and energy. So most people don't talk about it. They talk about, let's just hunt deals, we'll figure out the money later. And then the LOI goes in, and then this problem happens. So I would like to revise it by saying is, if you find a great deal, money would follow. That's true if you already have a pool of private investor to reach out. And then this way it's a little less stress-free and more likely for you to close on the transaction.
Man, I mean, what a myth. What a myth. And a couple of things in my feedback here is, especially as you get into the multifamily space, your name and proof of execution is everything. So a lot of times, if you happen to flop because you found the deal and didn't have the sort of consistency built up or the strategy per se of raising the capital, it can really set you back far. Because again, execution is everything in multifamily space with how much demand there is. And that will likely sort of stay with you, and you can overcome it by all means. But I think I love how you continue to bring in a lot of the different principles you talked about of, to me, I take away the strategy has to be known up front to then build sort of a pipeline and a pool of potential investors. But you can't do that unless you have that strategy, and the capital raise strategy needs to be sort of always ongoing, or at least the foundation, and then always ongoing, I should probably say. But man, I definitely, that hits home because unfortunately we see a lot of transactions fall out just because people couldn't piece together the equity. Any other myths or anything else to add on that topic there?
Yeah, the other thing is, the world of real estate is always going to be two wheels, deal and capital, right? It just, that's what it is. And a common scenario is everybody just gets trained to put all the time and energy into deal, and it's important, but also have to put time and energy into capital. Again, if you are just trying to buy a couple single family and you need $50,000 or $100,000, no big deal, right? But when you start to buy bigger complexes, you need $500,000, $1 million. Then you need to lay the groundwork and work on that capital side. Without that, it just creates more stress and limits your chances of success. So I would like to add, it's just basically deals important, but then the capital is the other piece of the pie that you have to kind of like figure out for yourself what I need to do to kind of get ready prior to the deal.
Absolutely. And I mean, when you think about it, anybody actively investing, single family, multifamily, I mean, you have to build up a pipeline, right? In order to then, 10 site visits lead to 2 LOIs, leads to one under contract. It's the same thing on the capital raise size, wouldn't you say?
Yes, absolutely. You're going to, same situation applies. You have potential investors, and then some of them are very, very interested, and then you have the commitment. So it's the same funnel thing.
Awesome. One of the last questions I'll ask here, and just a reminder, everybody, please fire away questions in the chat box here. We are about ready to start answering anything you got for us. But last sort of capital raise question I got for you is you touched a little bit on sort of who to potential look for and to when raising capital. Can you expand a little bit more on that, though?
Oh, like where to look, who to look for the capital from?
Exactly.
Yeah, so ideally, if you have your ideal investor profile, it would help you a lot. So if you're looking for, to give you an example for fishing, if you are just trying to go in the middle of the ocean and your hope is to catch any fish, what are your chances of success? Versus you go in the ocean and your goal is to catch a mackerel. Now you know what kind of bait to use, whether you need to go at midnight or 4 a.m. And how deep you need to go. You know what you're looking for. You have clarity, specificity. So same way in your real estate business, if you are doing flipping or multifamily or single family, what kind of risk in the return, are you looking for to provide to the investor? That will drive a little clarity. So if you're a flipping person, you know that your investor profile looks like somebody who could invest for short term, that could get a little break from market, stock market, and they also don't have their money tied up for a long time, right? But if you're a multifamily investor, then your profile looks for somebody that's a busy professional that wants to invest for 5 years, get some tax benefits, cash flow, so to speak. So developing that profile would make the job much easier on where to look for, who to talk to, and how to talk, and all that. So
All back to strategy, for sure. So I love it. I love it. Awesome. So got my last two questions I typically always ask in any sort of webinar. First one's going to be, I'm an avid reader or cheat reader. I like to listen through Audible. But any book recommendations that's top of mind to you?
Oh man, there's so I'm a big reader too. There's so many recommended. This question always trips me. It's just like where to go. But I would say Atomic Habits by James Clear. It's a great book for people to learn. How your little habits and what you're thinking and things are just basically affecting. And then also Unlimited Power by Tony Robbins. I'll just recommend those two books.
Awesome. And both great books on, mindset and taking action. So I definitely know both well, and great recommendations there. And then the last question then for you, I'm gonna have you give sort of your information, how people can reach out to you. I'm actually gonna put it into the chat box for everybody here too. Again, fire away with your questions. But the last question is just anything you want to relate this question to. What's a tip you have for the audience?
The tip I have is, to really, really think about your purpose, and absolutely anything you want, you could put 10 behind it, 10 times your goal, and it's doable. If you just have a bigger purpose, right? And just think of it in that terms, it's just such an exciting journey to go on real estate. It's not all about necessarily making a fortune, which you will, but also understanding yourself, all the ups and downs, and that challenge. Eventually, you'll just be somebody else, and you will really, really like that person because now you have so many things you overcame and experienced and things like that, which is way more important than just having X amount of units in your portfolio. Nothing wrong with it, but when you couple it with that, that would be my last thing, to focus on who you would become when you have all that goals done at the end of the day. So,
Man, it certainly drives you to have that purpose. And said from a man that has a lot of, I'll use another P alliteration word of passion and purpose. Ketan, thank you so much for being here. We're about to answer questions, but before that, how can people find you, reach out to you, talk a little bit there?
Yeah, sure, absolutely. So I do have a YouTube channel, so you'll get great informative videos. You could hit me up on LinkedIn and also on my website, ketanpatel.com. I have 5 pillars of peak performance waiting for you to grab a copy. And then if you are somebody that's investing passively, my company, Mookie Capital, I could help you there as well. So we could drop everything, all the links in the chat bar. Also sending my email there as well for you guys. So.
Awesome. So we got that in there, and it is now time for any and all Q&A. So we'll be taking questions through the chat box here. Unless I'm missing it, I don't quite. Oh, I think we got some stuff coming in. Yes. So I believe I pasted the information in here. The question is just for Ketan's information. And Ketan, if you want to repeat it one more time and also try putting it into the chat box on your end. Looks like
I just posted everything again, so it should be good. Yeah.
Perfect. Looks like we got another question here. Sometimes a tactic to not have to raise capital, asking about, does anybody ever use seller seconds anymore? So if you want to address that, and then Ketan, why don't you also hit this question too of what would be maybe the benefit of, instead of looking to do a seller second, which would eliminate a lot of times you from having to raise capital, why would it be beneficial to raise capital versus taking a seller second?
Yeah, so the seller second, as we know, we are in a hot market, so everybody's giving cash offers and stuff. So the chances are very, very low. You might still be able to find somebody that might take it, absolutely. But the benefits of raising capital is, let's say they took your seller second, that transaction's done. Now what's going to happen? You are going to have the next transaction, and the problem is going to come up again for capital. So learning to raise capital, building that database will support you so much. So I don't have to do any additional marketing anymore. And I was able to raise 1.5 million in the last 3 weeks because you build trust and relationship, and people will bring referrals, they'll repeat invest with you, and slowly your business will, be more on the growth side.
Absolutely. Definitely very accurate answer there. I'll also add, money gives sort of power and control. And then that control allows you to, whether it's, buy any kind of deal, because it's not relying on the seller having to deploy some of their equity back to you, or relying on the seller being willing to hold the seller second. You'll have more control in how you can structure offers and what kinds of deals you can go after. And so to me, that's one reason where, having the money at hand or available from other investors really can give you a lot more control and allow you to sort of navigate to where you want to go a little bit more predictably. I'll say definitely a great question. And you do see a lot of creative financing options nowadays, trying to, figure out any way we can get good deals as active real estate investors. Awesome question. Thank you for that one. We'll give it a couple seconds here for any other questions we've got coming in. And otherwise, this has been great so far. Anything else while we're waiting? Any closing words from you as well?
I would say also good to, have also have some conversations with your lender as well on the debt side. It helps to prepare a little bit, versus just having a deal and at that time you're trying to scramble and find a lender. It helps to build a relationship, because I have done over a dozen flips as well in construction. So I'm familiar that, when the deal's found, everything goes so fast. And at that time, you're trying to figure out terms with the lender, and things could get a little hectic. So it always helps to have a couple lenders on your Rolodex and have some conversations.
Well, you couldn't have set me up anymore for a better closing. We like to think here at Lima One Capital, we're very reliable. We have lines of credit to help you predict on the single family side what debt options you'll have, because you can't really know exactly how much you're going to need to raise if you don't know what a lender might be able to provide you with. So in an effort to not continue down the road of just touting the Lima One flag, we very much appreciate everybody's time here. I don't have to say I hope, because I know you got a lot of value out of it. Ketan, really thank you for your time and opportunity. Please reach out to us at Lima One Capital or Ketan for anything related to capital raising, passively, actively investing. And thank you all again for attending here. Happy Q2, happy April. Make it a great day, great month, great quarter, great year. Thank you, everybody.
Thank you so much. Thanks.